Hey folks, welcome to another Google Options update. Last Friday was over here and I had a short call spread at 132, which expired out of the money because I was looking at this trend and I did not think Alphabet would go above 132. So that was last week. However, I still had a couple of those naked short calls that were in the money. So I had to roll them again to the following week, which is this week. I rolled them for a small debit. So overall, my net premiums for last week is only $5. And I've mentioned last week that I wasn't expecting to get a lot. But this week, I'm planning to earn a little bit more from premiums. So overall, my annualized return is 48%, and I'm right now slightly below the yellow line, which is where I need to be. So I'm going to increase my premiums this week and hopefully get back on track. So looking at the stock price over the last few days, it seems like we've reached a top. If I open up the MACD here, you can see the blue line is starting to curl over. And this Friday is this blue line here. So we don't have confirmation yet that the MACD is going below the signal line. However, it is starting to show negative signs. Plus, we can see that the momentum over the last month has kind of stalled and now we're just kind of trading flat. So at least over the last week or so, it seems like Alphabet is just in this horizontal trend. This is a shorter week. So yesterday was a holiday. So there's only 1, 2, 3, 4 trading days for this week ending on Friday, June 2nd. And I can sort of see a smaller channel playing out over here by the end of this week. If I do this, Alphabet can go somewhere between maybe 123 and 130. So if I look at the option chain here for my short calls, I'll go to 130 and maybe I'll sell a 130 and 132 spread, maybe 3 of these.
Autofilled.
Okay, there we go. And then what I'll do is I'll take those 2 naked calls and I'm going to roll them right now to the following week. So right now they're at 122. I'm going to roll them to 123. And because the stock price today is not too far away from the strike, I should be able to get a credit just because of the difference in theta or the amount of expected time decay between this week's options and next week's options. So I'm going to right click on my option here. Initially, I think this was 120 and then I rolled it to 121 and then 122. And now I'm going to roll it to 123. So even though this is a bearish call, I've been able to consistently not lose money on it, even though the stock is going up over the last few weeks. So this is what I'm buying back, the 122 call. And what I'm going to sell is next week, June 9th, 123 call. So you can see I can make a nice maybe about $40 spread there, even though the strike is higher, but it's 1 week out. So I'll go with maybe 45. That seems to be the midpoint, and submit order. The other order filled already, by the way, over here. So that's 3 times 7 is 21. And I'm going to lower this down by 1 cent to 44.
Autofilled.
Okay, there we go. So that's a total of 44 times 2 plus the 130, 132 bear call spread minus commission. It's 103.45, which is going to be 141 Canadian. And the implied volatility this week is surprisingly high for a shorter week. And depending on what the market does, I might make another trade this week because if the MACD line crosses below this orange line and we get a red bar here, then I may sell another call option for Alphabet because that would be a bearish signal. And I can either do like a short-term option expiring this week or maybe I'll push it into next week. Anyway, thanks a lot for watching. I'll give you another update next week and good luck with your investments too.